Hi, welcome listeners. Today I have the pleasure and honor of speaking with Erin Ward, who's currently the owner and CEO of HRVA Homes, Keller Williams Real Estate here in Norfolk, Virginia. She's been a real estate agent, active and growing for quite a number of years and totally immersed in the community and the military network, the family network, and want to hear all about that. So welcome to the show today, Erin.
Yeah, thanks so much. I'm excited. I love this.
Yeah, great, great. So first off, I have to ask you, tell me a little about your background, how you got involved in real estate. Normally, it's not something that people jump right into, like right after college.
Right. Yeah, no, for sure. That's not my path at all. So I started out as a military spouse, moved around a ton, actually made about 19 moves
Woo.
as a military spouse. Yeah. And so some of those were local, right? Some of those were we were renting and landlord saying, hey, I want to sell, get out, right? Or just really bad military housing situations, which is kind of a big known thing these days. And so moved a whole bunch. And then when we really got bad information about the VA loan, just to use it once, those kind of things. So we really had looked into buying until we hit Virginia. And then we had a really bad experience with the real estate. It just there wasn't a lot of education, still a lot of VA myths that we believe that were busted, as I like to think. And overall, the customer service and what we were looking for just wasn't there. And it just kind of came across that time. Of course, this was like 2009 when nobody should be getting into real estate, right? That's what I kept being told. So I went to work for one of the top real estate agents in the area as an admin. Before that, I had worked in the DoD and data analytics. I had been on radio as a morning radio show host. So just a little bit of everything that some of us military spouses have these wild resumes. And so I kind of dipped my toe in for a little bit. And then I was offered a really great opportunity within the veteran service organization nonprofit space. So I stepped away from real estate in the admin sense for about a decade. And as nonprofit does, I got burned out, wasn't getting paid a whole lot as a COO, and decided, hey, let me get back involved into this real estate gig. I had some girlfriends, some other great military spouses that I kept telling my friends to go talk to. And they said, Erin, we could pay you, right, as an agent if you were licensed for referrals. So I thought, okay, well, I can do that easy enough. So I got a license to be a referral agent. But next thing you know, I'm selling real estate and it took off and it was great. And I really found a passion for it, in particular, education, right? Especially for our military buyers and sellers. I mean, that is really our passion. And I learned so much about things I didn't know and things that I wish I had known, especially when it comes to leveraging your VA loan to build wealth. And so now we get to do that for a living and it's really great. I love it.
Wow, that's boy. There's a lot of points in there I'd like to dive into. That's
Yeah.
great. So we're going to get into this VA and leveraging your VA loan for wealth building. I think that's a fascinating concept. But it's interesting how you talk about how you gosh, you moved so many times in the military. And, I have lots of military friends and neighbors, and I see that. And now it hits close to home because my daughter is in the Air Force ROTC out in Virginia Tech, and she's going to fly and be in the military there.
Love
And
it.
so I think about all the time she's going to move and whatnot. But your experience, like when you bought that your first home and your bad experience with a real estate agent, that reminds me when I did my first loan and I got in the mortgage business in 1998 because I had a bad experience when I bought my first home. And I thought, wow, if that yo-yo can do this, then I think I
Exactly.
could do it better, right?
Yeah, I mean, like, surely you have the skills to do this better, right? And I say that all the time. Somebody could get licensed tomorrow and be a better real estate agent than I am, just based on the service provided. And I think that's something we sometimes miss is this is a relationship business and it's a business that you're building clients for life, right? And so that's where you really, really have to be so passionate, so dedicated to the community that you're serving that I think, sometimes that gets lost a little bit too.
Yeah, well, I mean, there's a lot that goes into a real estate transaction, right? So, I mean, when you think about like from your position, you're serving this family that's looking to buy a home, maybe selling a home, maybe doing both. What do they say? It's one of the most stressful events in your life, right? Is
Right.
buying and selling,
Yeah.
right? And
Yeah.
so, as a professional, all the minefields that are out there. You know what could go wrong. In your clients, you're just trying to manage all this. And so On top of that, with multiple clients you're dealing with and just trying to, look beyond just this one transaction, but
Mhm.
how do I really help these people in the long run, right? I mean,
Right.
that's where
Yeah.
the joy comes from.
Yeah, and that's where the wealth building comes from, right? So, I mean, I think back now when I first became a military spouse in 1995. If we had been given the correct information, right? The information that you can use your VA loan as many times as you're eligible to use it, right?
Right.
As much entitlement as you have, as you free it up and do the smart things through refinance and maybe talk about burrs and things like that. If I think about that very first duty station, which was Fort Hood, Texas, back in 1995, and where that market just outside of Austin, Texas has gone, and had we have purchased even a moderately small, teeny tiny home in 1995, where would the wealth had been, where would we have started building that wealth? And at that time, I mean, we were very young. Do not get me wrong. I don't know that I would have suggested I buy a house. We weren't very responsible kids, right?
Sure.
But I see, these days, the folks that we work with as young as 22 buying their first homes,
Yeah.
in some cases even younger we've worked with. And it's so impressive to me because now we have the opportunity to say, "Hey, learn from what we're doing,
Mhm.
right? What we didn't do, right? And let me show you the numbers and the data's there, right, Paul? I mean, that's where the data's there so we can show them the average appreciation year over year in a traditional market that really leverages them and launches them into that wealth building and showing them how to maybe let's not use all of your VA entitlement on this
Right.
purchase right here. Like maybe we use a little bit, let's work for a year or so in that house, build the equity up, and then let's move on to the next house, utilizing your same entitlement, rent that one out because we already know what the rental rates look like. You're cash flowing, even if you're cash flowing $200 to $300 a month. Now we're rolling into the next house. Maybe that house is a little bit bigger, maybe it's the same size, but now you're building that generational wealth and building that VA, back really wealth and utilizing that earned benefit, right? To build wealth, which is wild to me that through your service, you could easily become a millionaire. Easily.
Yeah, it's crazy because I tell people all the time that that VA program is just the most amazing loan program that's out there. I mean, you've got no down payment, right? I mean, so the opportunity to leverage that over and over again, no mortgage insurance. And it's just and from a rate spectrum, they're always better than the
Yep.
rest of the world. So it's what a great tool and opportunity. So you're taking this concept. I want you to unpack it a little bit more because it sounds like to me, Aaron, you're really strategic about this and maybe educating your clients on, hey, let's look beyond just this home, for you and your two children, or maybe your brand new couple or whatnot. But let's look 5, 10, 20 years downstream.
That's exactly it. So we're working backwards, right? What is, like, exactly. Let's look at what's this end goal look like. So, we dig in with our clients. It goes beyond, hey, what are you looking for in a house? Right? Like that can't be the conversation. Even more so with our military families, right? Because they
Mm.
are cyclical. I mean, luckily here in Hampton Roads, we see them stay a little bit longer because we have so many different installation opportunities. But generally, they're moving every, 3 to 4 years, sometimes less, and so we have to sit down with them, and we have to really know what that long-term end game looks like, and once we have that, we can work backwards from there, and a lot of times, let's be real, it's the HGTV that gets in my way, right? Like, you're not gonna get the McMansion today because we're gonna work towards the best McMansion down the road, right?
Right.
And so we kind of work backwards from there so that we can create a picture of wealth long term so that when you get to the McMansion, all your little houses are paying for the McMansion, right?
Mhm.
Now you've built a retirement scenario. And really, in the military community, they've changed the retirement game too, right? So now they have what's called a blended retirement system where you can actually, for once, now get out of the military and actually have some sort of retirement without having to serve 20 years. And so we're talking with our clients to say, what are their goals? Are they a 20-year lifer? And what if you're not? What if a life circumstance comes up? Right. So we're talking through those. We're really long term planning with these people. And I think also, too, they understand that we care enough to sit down and have those conversations with them. and show them. And by the way, not everybody wants to wealth build, right? Some people just want to buy a house, but I think it's important we still have these conversations, right? And I've never had anybody say to me, Erin, man, I wish you had never had that wealth building conversation, So
Right. Yeah.
yeah, so I think there's value in that, right? And even if it's not something that works for them, when they're out in their community or they're on their ship or they're at their base or they're deployed and they're talking to their friends, they're like, hey, get a hold of Aaron if this is what you're into. You're reading Rich Dad Poor Dad. This is who you need to talk to so you can leverage that VA loan. Did you know? I didn't know you could do this. And they're sharing that information out to get rid of those VA myths, right? We're just giving education that they can take back out into the community.
No, that's awesome because yeah, I think more and more people are catching on to the idea, you know, of real estate as an integral part of your wealth portfolio. And I'm not a registered investment advisor or any stretch, but the stock market, I've long felt like that's kind of a rigged sport, right? Because there's
Yeah.
big money in there, there's hedge funds, and
Yeah.
all those guys get the data sometimes seconds before everyone else, and that's all that matters, right?
Right.
But with real estate, you've got a physical asset that, it's living and breathing. I think I have a friend that does a podcast. He talks about packaged commodities.
Hmm.
You've got all this value that's put together and it's real and it's tangible. And hey, people have to live somewhere, right?
Right.
So why not have a piece of that action? And as there's a limited amount of land. And as we both know, the supply situation of real estate, particularly, we talk about, normal appreciation. You alluded to that earlier. Obviously, the last couple of years have been abnormal.
Yeah.
But that's also created with, like historically, I mean, literally historically low rates that we've never seen and we'll never see again.
And they were nonsense.
It was nonsense.
Yeah.
But what that did was that took a lot of people, the people that have homes in I think it's 25 or 30% of all mortgages that are out there are they're under 3%,
Yeah.
so nobody's going to sell that home unless they absolutely have to, right?
Right. Right.
So that whole sector of the market is gone. That's not going to come on the market,
Yeah. Yeah.
right? And so you've got all these millennials and younger families that are that huge swath of population that's moving into, the family creation stage of their life and wanting real estate. And I think that's phenomenal that you're at least educating them that, hey, because like you and I think I did hear that when I was young, but I think I sort of ignored it when I was
Mhm.
young, you
Yeah.
know?
Oh, for sure. I was totally irresponsible. And I'm seeing more responsibility now, than of a younger set, people that are more interested in it now than I ever saw before, I think, which is exciting to me, allows me to do what I love to do. And and as you were saying, I think about the people who have had money in the bank for the last year. I just heard again, I'm not a financial advisor as well, but I just heard somebody I know who's incredibly wealthy was in town and I sat in the class with him the other day and he said, if you had your money in the bank and nowhere else for the last year, you lost 8%
Mhm.
of your funds.
That's
8%
right.
is gone
Yep.
because you left it in the bank. Whereas putting it in an appreciating asset such as real estate, right, makes sense. And nobody can deny, especially in our local community, that real estate, when held, builds wealth. Period. I mean, and that is why so many wealthy people own so much real estate, not to mention the tax advantages, right? Let's be real. There's some really great advantages of purchasing real estate. And if you are utilizing the VA loan to interest rates, as long as the numbers make sense, nothing matters. As long as
That's
the
right.
numbers make sense, it doesn't matter what the interest rate is, right? Like at the end of the day, especially when we're leveraging it from a wealth building standpoint.
Well, yeah, and I mean that's a huge subject because, and compared to what? So if you look at a VA loan as a tool versus we do a lot of investment business and a lot of commercial, and generally in those worlds, you're putting 20%
Yeah.
down. So you're taking, a significant amount of capital that you're putting into this property and your return is based on what you're putting into the property. Well, the VA loan, you're putting zero into the
Yeah.
property, right?
Yeah. Yeah.
And so your return is, if you're making anything on it at all, is infinite, essentially, right?
Right. Well, and the reality is, I mean, this is what we say all the time, right? So if you're active duty service member and you're getting housing loans from the US government, right? So not only are you buying a house at zero down, so typically, right, let's say what are your costs, right? Your couple upfront costs of your earnest money deposit in our area, a home inspection and appraisal fee. Then on
Yep.
closing day, you got closing costs should they not be covered or negotiated to be handled, right? No big
Right.
deal, right? Still far less than any other loan type. And then, as you mentioned, if you're purchasing into a property that is within your housing allowance, well, now that's part of your earned benefit that's being paid for. So let's say you're here for 3 years, right? And you hold on to that property and you move on to the next duty station and you've held on to that property and somebody else is paying that mortgage for the next 27 years. You've just got into that property at about 3%.
Mhm.
At around 3%, should nobody be paying your closing costs,
Right.
right? And
Right.
so, what the heck? In 30 years, Uncle Sam paid the 3 years of your mortgage and the tenants paid the other 27 years, and you've done some maintenance and upkeep. And if you bought in a smart location with rental appreciation or equity appreciation, you're doing great. In 30 years from now, it's all gravy, and somebody else has paid that entire mortgage.
That's right. And so, yeah,
Wow.
if you did that once every 3 years for
Right.
your career, you'd have a 10 of them, right? And
Yeah.
this cash flow and this asset, and it's just, I mean, even just with that.
Yeah, it makes no sense not to do it. I don't care what the interest rate is, as long as the numbers make sense. I think the only issue is getting out of your own head of what the type of house is that you should be buying, because it is not your forever home. It is a wealth building, and that's
Right.
all it needs to be looked at initially as an asset, because you're not settling to this house. That's the difference. When I was told, when I was a young military spouse and we were told not to use our VA loan until we got to our final
Wow.
retirement home, right?
Wow.
Well, really, what I want to say is don't worry about using your loan for the perfect house until you get to your retirement home. Let's use that VA loan for the wealth building tools until then.
Yeah, no, that's absolutely awesome. I think you mentioned HGTV earlier. I think in one way they benefit you, but another way they probably
Yeah.
set you up for a
Oh,
conversation
yeah.
that we have to have a reality check
Yeah.
here on, it's like, yeah, you're probably not going to get your, MTV crib on your first
Yeah,
home,
yeah,
right?
exactly. There's always one spouse who wants shiplap and the other wants to do all the work, right? Like, so we juggle that a lot in our with our spouse situation, and that's fine. I get it because I have the same dynamic in my own relationship.
Yeah, yeah. Well, no, that's okay. That's fun, but somebody has to quarterback that, and that would be you, right? The third party, like,
Yeah.
let's work
Well,
on
and if you look at the long-term goals, right? Going back to the goal, going back to the conversation, I just met with clients about a week ago, and it was like, hey, we really want this bar dominion at 100 years from now, not 100 years, right? They're about 15, 20 years out, right? We want to be in this bar dominium in Texas where we're from, and it's going to be X number of dollars. By the way, super affordable, right? At this time. But I'm like, hey, you can triple that, right? We can triple X that by building wealth, or we can figure out a way. And starting today, you guys can pay cash for that and not even touch your VA loan should you want to, or touch your VA loan and have all that cash sitting there to build it in other ways because now you're in retirement land. Right.
right.
So many different options.
Wow. Yeah. So just having the conversation and bringing it out and knowing what their goals are long term, and then the tools, because as you say, most people I talk to have no clue
Yeah.
about the VA and what they
Well,
do with
and
it. How
I
do you?
mean, honestly, this is my job all day, every day. So of course I'm thinking right along those lines. I don't think my clients should be thinking along those lines until they
Yeah.
start getting into this, right? So I think, I think when you're in the civilian sector, right? Not in the real estate, right? You're not in the industry. So I call it everybody is civilian at that point.
Right.
Right?
Right. Right.
When you don't know what you don't know, and there's always this like, I don't know where to start or what to do. Start asking the questions and
Yeah.
making sure that you're asking the questions and working with someone that's going to dig in deep at a deep level with you,
Mhm.
because it goes beyond this transaction rate, as you
Right.
said earlier.
Yeah. 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 No doubt. I appreciate that. Yeah. Begin with the end in mind. I think you said that
Hmm.
was a famous Jim Collins quote
Yeah.
from Good to Great. And it's so true because you can get buried in the moment and lose sight of what's really important. All right. Tell me this, just to kind of shift gears a little bit. Tell me about one or two of the most interesting transactions that you've had.
Ooh, yeah.
Interesting or funny or like, oh my gosh.
So I had one, this was a couple of years ago, really good friends of mine, also a military family, wanted to buy a pretty cool house It was a pretty cool house, kind of getting in that, forever home territory at this point. He was on his way to retirement. And we found this really neat home. Not quite historic, but it had a lot going on for it. And we went in there and the owners of the home had, passed on. And so their heirs were selling the home for them.
Mm.
And as we got closer to closing, our title search came back. And it turned out that the father had a secret family with about 4 or 5 other heirs that
Oh my
also had to bless off on the property. It was a very wild ride. We did get it closed. It took about an extra 60, maybe 90 days to get it closed. But this is why title insurance is so important, right? Um, but yeah, so we went through that. That was pretty interesting. A very cool house. I love that house to this day. They've done some really neat stuff to it. It's a very cool property. But that was a very interesting, like, who's gonna deliver the news to these kids that they have siblings? I mean, they're all grown adults at this point, but
Yeah.
that was pretty interesting. And I would say we close about 150 transactions a year on average, and about 70% of that is sight unseen, just by the nature of being so military heavy, and most of our clients are not here and cannot fly back and forth to house hunt. And
Mhm.
so we've had some really fun times. I lose sleep before they get here saying, I hope they like the house we picked out for them. And so we've had some, I actually had one of my favorite clients of ours. She reached out to me yesterday. And that is, you mentioned it's such a stressful time just buying and selling a house, but buying and selling a house and moving your family across country, or doing this all while your service member is deployed, or whatever the case may be, I mean, is even more stressful. And so sometimes they get here in the exhaustion of all that, coupled with buying this house you've never seen, can be really overwhelming. And so we did have this dear client of ours who just came in and she was like, I don't like the house at all. And I was like, okay, well, let's sit down and talk for a little bit. And we talked and she was like, you're right. I'm just overwhelmed. And she actually just yesterday sent me a message. She's like, I'm so glad you talked me off that ledge because I love this house. And so, those kind of things they've only happened maybe once or twice in 6 years for us. But it's always an interesting ride to do these sight unseen transactions. But again, that's where we go in with such an investment minded focus on it. So and that helps quite a bit.
Wow, that's so you were head of the COVID curve,
Oh
right?
yeah, that didn't.
So many you're like you Zoom and all this you've been doing for years.
Yeah, we do it a little bit differently. We don't use Zoom. We have another program that we kind of use so that they can watch it over and over again. They can communicate with us while we're there, but then it saves it. And they can invite their friends and family to come and watch it too at the same time. It's kind of a neat idea to do it that way. Cause I mean, we saw a lot of like FaceTime tours. Well, what are you going to do? They're not going to remember what happened afterwards. So
Right.
we kind of switched things up a little bit years ago. I mean, this probably 5 years ago.
Mhm.
And so we knew right away that had to be like a huge part just for the nature of my, life as a military spouse, and all my friends live everywhere. We knew that was going to be a big part of what we do. And it's 70% of what we do now. So a lot.
Well, that's nice about being in a military community from a real estate standpoint, right? Because you do have a lot of turnover. I mean, it's sort of stable, as you mentioned, because we have a lot of facilities here, but maybe more so than a lot of military areas. But you do get sort of a turnover, new clients
Yeah.
in, and a lot of referrals. And for those that aren't keeping the home for that long term investment portfolio, I imagine you're helping them sell the property too when they.
Yeah. That's what, when you get into real estate, they're always like list to last, what they tell real estate agents, right? You have to become listing heavy. I did not do that. We are pretty listing heavy right now, but initially and for years we've been buyer heavy. But where do buyers start? Or where do sellers start? Excuse me. They all start as buyers, right? So at some point, we knew as long as we hung in there, gave great service and stayed in communication with them, we're able to work with them. But that's the other reason why it's so important to us to make sure that they're making those smart investments, is because we're probably going to have to sell that at some point. So whether they decide to keep it or not, we need to make sure that the resale value is going to be there. And we do naturally get clients that didn't purchase with us, that probably purchase in areas that aren't going to, if you looked at the numbers, would not in a traditional market gain in appreciation enough for them to sell in 3 years. And that's tough, right? So again, in our market, we're blessed, right? Because we are such a military heavy market that utilizing a VA loan isn't difficult like it is in so many other markets. But it's also tough because you need to make sure that you're looking at the data with your agent, that you're purchasing in an area that shows ongoing appreciation in traditional market sense. Because if you need to pull out, even if you're, in a perfect world, I want you to buy the home and hold it, right? Like I always say, I'm the worst real estate agent ever because I don't want you to sell it. I want you to buy it, hold it, right? But everybody needs an exit strategy. Every good investor has an exit
Yeah.
strategy. So regardless, you need to be able to pull out should you need to from the market and have some sort of appreciation in that to
Yeah.
the best of our abilities, right? We don't know when the next COVID's going to come, right?
No.
Or like what's going to happen.
Yeah. Yeah. If we had a crystal ball, then we probably wouldn't be doing these jobs, right?
Yeah, for sure. For sure. Yeah, absolutely.
Your morning radio show would have been something like, I don't know, CNBC or
Yeah.
Fox Business or something. Yeah. From your yacht.
Yeah, exactly.
Yeah, let's get Erin from the bow of her, 82
Yeah.
foot yacht there. She talks about what's
We a
about to
whole
happen.
different world. Yeah.
Yeah.
Well, and
Yeah.
that, that's like we say, everybody who didn't want to dip their toe in last year because, they didn't want to compete with 30, 40 different buyers, on every house. Well, this is the market for you. And that market where you don't want to compete is never going to be a sub four or even a four and a half sub, four and a half below interest rate market. That's not going to, you're going to be in a competitive market in those interest rates. So if you don't want to compete, with the 30, 40 other buyers on each and every house, then you're going to be playing in a little bit of a higher interest rate market, but you're keeping more cash in your pocket generally. You've got more negotiation power generally. So again, I go back to, do the numbers make sense? Then pull the trigger.
Yeah, and interest rates they go up and they go down,
Yeah.
right? So if
Yeah.
you get in at the higher end of the market, then in a year or
Yeah.
two, when the market, the rates come down, you just refinance that
It's
out.
not, yeah, it's not a life sentence. This isn't prison. It's just an interest rate, right? Like, I don't know anybody who's ever kept an interest rate for 30. Never. Like, that's not a thing.
Oh, the funniest thing, Aaron, is everyone wants a long-term fixed interest rate,
Yeah.
30 years. And in all my experience, we used to laugh because, yeah, the average person refinances over a 20-year period of time. They move 3 or 4 times. They refinance about in between each time, at least once. So it's about 7 transactions
Yeah.
in 20 years. Like, you really don't need a 30-year loan,
Yeah.
but if that
Yeah. I
makes you
mean,
feel good.
hello, there's some good arms out there right now that I'm not kicking out the door myself.
Yeah.
Even looking at myself and as an investor, I mean, some of these interest rates personally that I look at, or one I even took not that long ago. I mean, I think anybody else, if I was talking to my clients, they would have gagged, but the numbers made sense. It didn't make a
Yeah.
difference.
Well, and at the end of the day, there's been an adjustment, I think, of expectations
Yeah.
because, you and I both know the history of this thing. I mean, when I got my first home, I think our rate was in the sevens.
Yeah.
And, and that was kind of normal for a
Mhm.
long time. And then fives and sixes has kind of become normal. And then we had this COVID thing, which is abnormal and once in a lifetime, once in a century, never happen again. And so I think as people adjust their expectations, sort of get used to it, and we're going to see in the late fall and probably early first quarter next year, we're going to see rates come down
Yeah.
with the yield curve and all that. So
But guess what's not going to come down? Housing
prices.
prices. Right?
That's right.
We still have an inventory shortage. So if you look at,
Yeah.
inventory market, our inventory market here locally, and most of my friends across the country, honestly, it's still a seller's market, right? Because
Yeah.
inventory is not here. And as you mentioned, people aren't selling because they love their sweet interest rates, right?
Yeah.
And what did we stop doing in 2008, 2009? Building new construction, right?
Yeah.
Housing starts stop. I've read studies that say it's going to take a decade or more to start to replace the new construction that stopped.
Yeah.
So
Yeah.
they may not, I mean, housing costs may not be going like this, but they're still going like this. So I would take a 6% now to refinance in 6, 7 months when they come back down again all
Yeah.
day long.
All day long.
I would love to stay here at this market here with these housing prices here and not here and not re-enter when they come down again in a competitive market.
And now I'm fighting 30, 40 other people, right?
Right. I mean,
Sit on the sideline.
it is one of those things where I love everybody I talk to about real estate, but when you don't want to get in the market, you don't want to compete with everybody or pay $40,000 more, but you like that sweet interest rate and you held off and now the interest rate is like this, if you want the perfect market as a buyer now, today, this is it. Pull the
Yeah.
trigger.
Absolutely.
Don't wait.
Absolutely. Well, on that note, we're about out of time. So tell everyone, Erin, how everyone can reach you and your team.
Sure, yeah. So we're easy to find. So we're HRVA Homes. So that's Hampton Roads, Virginia. That's the name of our local area here. And you can find at HRVA Homes on Facebook, at HRVA Homes on Instagram, and HRVAhomes.com. We're all over the place. And we do a lot of fun stuff on our Instagram and our Facebook. So I would definitely suggest taking a look at that. So
Yeah, we didn't get into what you do for fun. We'll have to go to
yeah,
the
yeah.
Instagram, Facebook page to learn all
Yeah,
that.
well, there's a little office dog barking outside my door right now. There's a pretty fun video on our Instagram about his first birthday. I suggest checking out.
Sweet. That sounds like fun. I love dogs, so we'll check that out. So, Erin, it's been great catching up here today. Great having a conversation. I love what we talked about, the building wealth with the VA loan, and just every and your passion for the military community and really educating, that community on their opportunity that they have for now and into the future. So, thanks for being part of the show.
It's my pleasure. I loved it. Thank you.
Bet.